Let us take a tour of the dollar cost average calculator on Aiolux. Dollar cost averaging, also known as DCA, is a popular strategy where an investor puts in regular amounts over time into a stock, ETF, or cryptocurrency to build a position. The advantage of this strategy is that the investor does not have to know how to time the right moment to buy the stock. On Aiolux, it is easy to simulate a DCA strategy by simply specifying the asset, Apple stock in this case, and the investment schedule. The schedule consists of the amount you want to invest, such as $200 here, along with the frequency such as weekly or monthly. You can specify actual start and end dates when you would have made these investments or quickly select a custom time period using the quick range options, such as 5-year or 2-year. If you also owned a position in the asset before beginning this investment schedule, you can specify the initial quantity and the average price or basis you owned these initial number of shares at. After you click on the Recalculate button, the dollar cost averaging simulator uses actual historical financial data to calculate the evolution of the position for the asset. The absolute returns chart here shows how the investment position would have built over time. The orange line, which is the DCA cost, shows the amount of your investment increasing over time. The blue line represents the DCA value, showing the value of the investment over the same period. The gray line reflects the notional gain or loss you have at the corresponding period of time. Here we see that the investment would have been a small loss in June 2022 but has largely been profitable at other points of time. The second chart shows the percentage returns for your DCA position, and the cumulative returns of the underlying asset in the same time period, as well as the period returns, monthly in this case. In this example, we see that your dollar cost average strategy generated a return of 7.7%, whereas Apple stock had returned 31.1% over the same period. With the benefit of hindsight, if you had the entire capital available in October 2020, it would have been better to invest all the money into Apple then, as opposed to buying a little bit every month. This is, however, not always the case, especially when the asset is more volatile than a megacap stock like Apple. The final chart shows the average share price of Apple stock and the average share price of your holdings through the DCA strategy. In this case, one can see that the dollar cost averaging strategy happens to only be at a notional loss to the prevailing Apple stock price a few times in the last 2 years. Visualizing the DCA in these ways is important to understand how the strategy would have worked over time and preparing yourself with regards to the historical volatility. You can also refer to the guide for further information. Aiolux is not a financial advisor, so consult with a registered investment advisor before any decisions. Aiolux has many other useful portfolio tools, so be sure to check those out using the top navigation or the sidebar.